Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here for a weekly Forex analysis for December 13th through the 18th. Before we get into our analysis, we would like to just show you the disclaimer to remind you that this webinar is for illustrative and educational purposes only. And before we get into it, one last thing we're going to take care of is just want to remind you to subscribe to our YouTube channel, Forex Trading Unlocked. And also we're going to be talking about some high probable Japanese candlestick pattern signals in this webinar, which there's also a book entitled High Probable Japanese Candlestick Patterns available on Amazon.com in paperback and Kindle versions. And without further ado, let's go to our live screenshot here. We have the Forex-Trading-Unlocked.com website pulled up already, and from our market analysis tab, we've pulled up the workstation page. That's already prepared. We're going to skip past the economic numbers. Now there are a bunch of numbers for the euro, the pound, and the US dollar and the yen that are not, I wouldn't say they're mostly medium economic numbers. The biggest thing to be concerned about will be Brexit for the pound and the euro. And then we have the fact that we're coming into quarter end and year end very quickly. We only have 2 weeks left in the trading year. Can you believe that? That's pretty crazy. That 2020 is almost over, which I think everybody's ready to put a nail in the coffin on this one. So we have the dollar index chart pulled up already, and as you can see, we have this downward sloping resistance line that the trend has been coming into over the past few months, and now we're trading below it. This has been pretty much buffering the dollar index trade as we've been going through from the high of the year back in March all the way down to what is now the low of the year as we head into the end of 2020. Now, right now, it's very bearish. This trend, lower move lows, and lower move highs, is indicative of what? A downward trending market. So right now, we are waiting for a signal. We're very bearish, but we are waiting for a signal because right now the dollar just seems to be overdone, and we're starting to see some divergence in currencies, and we'll go over that in just a moment. So a potential short-term bottom forming here. We ended the week with a higher move low on the over the past week and a half, but we failed to make a higher move high. So we're waiting for at least that to put us on the neutral campaign. Just by attrition, I think that as we head into the end of the year, in fact, let's just put this here so we know got our marker. Here is our end of the year, and Brexit will be happening, but Brexit doesn't matter for the dollar index. But here I think we could go sideways and pretty much just chop around this downward sloping resistance line, passing through it by attrition. Dollar index maybe a little lower, maybe a little higher. The key is to get above this 92.11 area. Any rally above there, I think, will find decent support, not necessarily being bullish the dollar, but being short-term strength coming back. And we may start to see that as we head into the last 2 weeks of the year. All right, we have the euro US dollar pulled up here. A little over a week ago, we had a dark cloud cover sell signal. That's this top. That's where this first red day is up here. Now, this dark cloud cover sell signal has the market targeting down to this $1.1957 to $18.92 area. $18.18 I think would be the lower extreme because it also has this upward sloping support line that's been holding this trend intact for basically, like they said, with the dollar index going back to March. This goes back to May of this year. So this trend is not that steep for us to have a correction that comes back into this target area, and then for the euro US dollar to bounce and even make longer term highs is not outside of the realm of possibility. I think long term, especially with the Biden presidency and after Brexit is over, it would be highly likely that a rally would ensue that would take the euro US dollar above this $21.77 area and target some multi-month highs, probably be up towards $1.25 to $1.27 before it'll run out of gas for a little bit and digest. Overall, I would say you have a good chance of seeing the euro US dollar probably back trading about the 125 to 135 area sometime between the first of the year, the 1st of February and the 1st of July. That 6-month period, I think, is probably when you're going to most likely see that. So long term, we have a very bullish outlook. This has political fundamentals, as well as the fact that this is in a bull market. Right now, we're looking at this sell signal as setting off a short-term correction on the daily basis. And considering we have the Brexit, no Brexit nonsense going on once again in the EU between the UK and the EU as far as coming to a deal, we know they're going to have some basic stuff that will be passed no matter what. Just right now, I think, is going to restrict the euro from making higher move highs. The fact that the dollar index settled higher and is also looking a lot like the euro in an upside down way. Now remember, the euro is the biggest component of the dollar index. The euro stretched new highs this month all the way up to this sell signal here. We at a low of $1.16 and a high of $1.21.77. That is a very, very strong move to have all have happened within a period of just 1 month's time without any really major, I mean, the coronavirus thing is on the table, but it's not as impactful as it had been earlier in the year. So I think right now you're looking more at the Brexit situation right now. So we'll monitor this situation now, just to give you a little bit better of a guide also as far as for the euro US dollar. If you take a look at the daily, like we have that short-term sell signal, we're reinforced on the hourly chart. We had a sell signal that had occurred right here. This was, let me pull this up, make this a little higher and easier. So for Friday's trading, the market had run into a lot of resistance here, fell off the map, and then ended the day lower, and definitely right below some key critical support here at around $1.2111. Any trading above here has pretty much the euro in a neutral trade up to $1.2147, so bobbling around in this area. Below $1.2110, this market is targeting lower levels, pretty much down to $1.2045. Now this is on the hourly basis. Okay, so on the hourly basis, we have the euro US dollar targeting $1.2045. Let's go back to excuse me, our daily chart here, and we have it going down to $1.1957. So let's just say that we get the hourly, and that touches off. If it trades down to $1.2045, that would mean that we will have topped over here on December 4th, come back, made a higher move low, then made a lower move high, which would be Friday's trading, and then once we take out, like I said, this 2056, hit the 2045 target, that would mean a lower move low after a lower move high. That would definitely have the euro US dollar in a short-term neutral condition, no longer on the short-term bullish trend format, which that would coincide with our daily sell signal. And then once, like I said, if it hits that hourly target, it doesn't mean it's just going to drop like a rock down to $1.1957. It may. And one thing I have to typically go out like they come in. This was a very, very radical move within a 1 month's time period. I'm not saying that over the next month we're going to drop all the way back down to $1.16.5, but it's very likely that we have a corrective move down to hit that $1.2045 target on the hourly, which would also have us grinding probably support and then playing and flirting with a slip down to this $1.1957. You may see a lot of buying pressure coming in here, so to penetrate this whole downside target area, I would say if you are a bigger bear and you're riding a position down, to take a little bit off the table at this first target area, especially if you get down to $1.1957. And then if you can lower your stops and work a trade down, because you have this upward sloping support line that comes into this downside target area. So between Brexit and the holidays, remember we have holiday markets coming up. This next week is our last full trading week of the year. After next week, we're going to have 2 holiday shortened trading weeks globally. It's going to impact the currencies as well as far as volume and stuff like that. So let's go look at the other biggest component of the dollar index, the British pound, US dollar, since we're talking about the Brexit, which we've seen some pretty funny memes and cartoons between Angela Merkel and Boris Johnson, especially one with him with a pair of scissors cutting a string saying no Brexit, where it would have him falling off a cliff. So interesting takes that people have around the world on the politics going on there. So politics aside, remember here, December 31st, this is our Brexit marker. Now, we had a sell signal here in the British pound, just like we had one in the euro back on December the 4th. We had a little bit of choppy action this week. You can see the volatility that the pound has had, which of all the currencies, we know that the pound is one of the currencies that when it does start to swing, it has extreme ranges. This week not being any different. I mean, we can see that, what was it, just on Wednesday, the high was $1.3478, and the low on Friday was $1.3132. Quite a big move within a period of like just a little over 48 hours. Now, interestingly enough, our sell signal now has pretty much been completed, because on Friday we had came down and pierced our $1.3212 upper end price target. We fell just short of hitting the $1.3105. Now we settled above at $1.3217, just above this point. Interestingly enough, just like we're looking on the euro, is that we had made this high. We came back, we made a higher move low. We rallied to make a lower move high, and now Friday confirmed a lower move low. This is pound definitely on a neutral bias for at least the short term. Now, we're not bearish at all, especially because we have already hit into our target area. And just like the euro, this has a nice evenly sloped trend going upwards. As you see this upward sloping support here, this is almost like a 45 degrees. So that's a very decent trend slope as far as for the market to travel above and bounce off of. So for us to hit in this target area, and even by attrition as we go into Brexit, come into this little area on this upward sloping support line, and then to go neutral and just chop around sideways or even rally back up to make potential new highs at $1.3541 is probably, I would say, the most likely scenario. So short term, we are neutral to slightly bearish. Sell rally forecast. Lower move lows and lower move highs are indicative of a bear trend. So short term, we are bearish, but I would use caution. Look to sell rallies instead of selling into breaks, because you don't want to get caught selling in the hole. But if you start to see especially the euro erode, let alone if there's a big play on all the other currencies, if the dollar gets a rally against that, then perhaps you can see the pound US dollar press newer move lows and maybe even come through this support line and take out this area and target around $1.3004, which I think would be your major extreme. This is an area where you had a lot of, it was either support or resistance, so it's pretty tight around here. I'm not expecting much of a sell-off below that unless we get a major dollar rally, and I don't see that with a Biden administration coming in right now. US dollar CHF. Let's see how this is going. Interestingly enough, what do we have here? We were a big bear. We were waiting for a signal. Guess what we got? We got a signal here. We definitely got a signal. So what happened in this day right here? We have this rally, and we settled. Let's see, what was the open? Did we do it? 88.94, 88.93.9. Nope, it's not quite. Okay, so this stayed inside. So interestingly enough, we don't have a buy signal here, even though we had a very positive close. Right now, I would say you want to key off of this last high right here. Any rally above 89.47 would have us on the neutral campaign here, not necessarily the bullish campaign. Downward sloping resistance here is very strong. Now remember, this, even though we have Brexit coming on, and the Swiss is obviously in part of the EU, the Swiss currency is a flight to quality currency. So you always have, remember that there's the dollar, there is the Swiss, and then there is the Japanese yen. For the European basket of currencies, the Swiss is definitely one of the earmarks for flight to quality. Right now, like I said, we are waiting for a signal. We'll see what happens over the first couple days of the week, this week ahead, and also see if the other currencies, such as the euro and the pound, if they fall off. Now, if most of the currencies fall off versus the dollar, I would expect to see this US dollar Swiss continue to pressure resistance up towards this 89.47 area. If it's legitimate and there's strength, or let alone dollar strength across the board, then we would probably see a little more follow through, getting up towards this 90 even area. This last low that was stamped in here, this would be another key directional pivot. So I think right in this area here, you'd probably be buffered and stopped. Interestingly enough, though, while this market has been unwinding, it's had a lot more volatility, excuse me, volume and volatility and ranges than the Euro US dollar, which is significant when a currency such as the Swiss overtakes the euro as far as those variables, because usually it trades inside the euro. It's a bigger currency. So when this is reacting like that, that tells me that it's possible that the Swiss is going to become in play soon. But we're waiting for a signal. So we really don't have anything for you there. Let's go and jump around the ocean the other way and go to Japan. The US dollar Japanese yen has been in a very interesting neutral phase here. We've been waiting for a breakout, upside or downside. 104.77 down to 103.65. This is a chop fest. I'd be very, very cautious, especially trading right around this midpoint here. I would look to, if you are a bull, look to buy against this 103.65 area. However, a failure here would mean newer move lows and have us most likely pressing this downward trend towards 103 even. Remember, the US dollar Japanese yen has been in a downtrend for quite some time, making lower move lows and lower move highs. This significant lower move low and lower move high here really confirmed how much this US dollar yen doesn't want to get a big rally going on, meaning that settling into a neutral phase could be exactly what's going on, where they don't have Brexit that they're dealing with. Everything between Japan and the US is just moving along as it normally does. There's no trade deals that are going to be negotiated. Everything's been done with that. As far as production side and things like that, that's the only thing that 2021, hopefully, as things come back online, that's good for the Japanese economy and also the strength of the yen. I don't see the dollar getting a big move to the upside once again unless we break out above this 104.77 area. And then even if we do, I think you have to be mindful of the trend here, and we'll get this in place right here. So if we just use these significant levels right here, if we do get the breakout here, then maybe we'd be set for a neutral, short-term bullish, longer-term, medium, longer-term neutral, because if you look at where we're trading here from most of the fall, actually, if we go from September and we hit this area right around the midpoint of where we were bouncing around in September, that would put us right above this area where the downward sloping line is coming into. So we'll probably come into a lot of heavy resistance at this area. Let me make it a little clearer with a horizontal line right there. So yeah, 105.24 area, I think you would most likely see us buffer against that first and kind of chop around as we come out of, as we take out the longer term downward trend and start to go into a neutral trend. Once we start to develop a base there, now remember, if I'm bearish the dollar overall for next year, as we have a transition of presidents and what have you. We know we're going to have a lot of turmoil politically in the United States as far as overturning all kinds of things, which that impacts businesses. Besides the coronavirus lockdowns that have impacted businesses globally, including in the U.S. As well, we have the whole issue of are we going to get through this winter? We don't even know if it's going to be worse than it was last spring, or if it's going to be the same or less. Right now, things aren't looking in the positive direction, at least in the short run, besides the virus vaccines that are potentially going to be released out to most of the population within the next year. So we'll see how that happens, but we're going to forget about, we can't predict anything when it comes to Mother Nature. What we can predict is what goes on in the marketplace, and especially by price action. Price action right now is showing stability as far as the US dollar yen, so I don't see too much pressure to the downside unless we have a failure here at 103.65. We had a negative close. I think that the reason you have the sell-off dollar yen is because when if it was just a dollar trending move that was going on Friday, you would have the dollar down versus all the currencies, or the dollar up versus most of the currencies. That wasn't the case. What we had was we had the euro and the pound that fell apart, and the Swiss obviously also fell off, which gave the dollar index a boost. Now, when those currencies are typically falling against the dollar, that's typically when the yen goes the other way. So I would say that Friday's sell-off in the yen is probably most likely attributed to profit taking on the week, as well as the fact that the other majors were bears versus the dollar. So usually there's an inverse relationship, meaning that when the other currencies are bears, the yen is a bull. Okay, if that's clear sense to you. So I think that's what we noticed on Friday. So we'll see what happens on Monday's opening. Now, if Monday this sell-off, there's follow-through and we get below this 103.65, well, then all bets are off, and then you're looking at the dollar being most likely a bear. The other thing is that if it does continue to go lower, and the other currencies go higher, that means that we have the nice divergence, which means that the whole coronavirus is off the table as far as the dollar is concerned for a little while. So we'll have some interesting signals that we're waiting for. Right now we don't have one here. Now let's go and look at the other part of this trade. Australian dollar, US dollar. You want to talk about a currency that is a monster bull. This one would be it. So it's unreal what this currency is doing here. It's been a bull raging on, and you look at how we go all the way back to April. Remember in March when the dollar index peaked back in March, this currency bottomed, and it has been a relentless bull going all the way into Friday and then topping out. So this is a big bull. We're waiting for a signal. Did it top on Monday? Well, I don't know. If every day for the past month you were saying this is market topping, you were wrong for the most part. So I'd be very cautious with this one. So we're seeing dollar weakness here, and this is why I think the dollar index, especially when you have a sell-off in the pound and the euro, and as long as they don't make new highs versus the dollar, the middle range currencies right now, they're extremely strong versus the dollar. But even if they just sell off a little bit and have a neutral trade, that keeps the dollar index in a positive way. So it's going to be really hard to just look at the dollar index and get a gauge for strength or weakness with the dollar, because we have the currencies now that are free flowing and starting to come back into their own way. Because remember, the first part of this year, because of the coronavirus, it was pretty much a one-way trade with most currencies either bullish or bearish versus the dollar, depending on what when we look back. So with this one, we are waiting for a signal. Now, New Zealand dollar, US dollar, interestingly enough, is showing something a little bit different. We had a bearish engulfing line sell signal a week and a half ago, and then all of a sudden we had this rally that took it out. So now, what are we looking for here? We made higher move highs after a higher move low, which is indicative of once again, a bullish trend. Now, this is a very vertical trend, just like the Australian dollar. So as far as being bearish, no, I would say a correction is overdue, but that doesn't mean it's going to happen anytime soon. But this one here, it seems like it is the volatility as it makes a new high and now starts to come off. We'll see how it reacts next week. If we see a failure of these lows, like this made a good support area that we bounced off and had follow through going in from Wednesday into Friday. But when you look at this, if it comes back below this here, that would mean what? A higher move high and a lower move low. That would put us on a neutral bias. So definitely any trading below 70.07 here has us in a short-term corrective phase targeting at least the 68.78 area. Any extreme break would somewhere be down to the 67.37. Most likely not going to happen. This would only be a case for dollar strength. Now, if we'd have, for whatever reason, a big turnaround in the dollar, whether it's because of geopolitical events or whatever, I can't think what would really happen over the next 2 to 3 weeks just to really get the dollar bulls raging, even if it's just for a profit, unless there's a big profit-taking move on the long-term trend traders. at the end of the month, as they clear out their books and balance before they head into 2021. That's also very possible. But those are scenarios we have 2 weeks away to wait for. So right now we're waiting for a signal. And a failure from $1.7007 would be it. So if you're an aggressive bear, selling against the current high is probably a very low risk trade. However, I would not risk much beyond this high, because any rally above here confirms that the strength of this market is just in place and is not gone yet. So we don't have a real valid sell signal yet. We're waiting for it, but it does look like it's getting a little toppy just by how the volatility has been handling with this currency. Now let's go to the US dollar Canada, see what's going on above our borders here from the United States. This is an interesting trend. Obviously, bearish, 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 new move lows, lower move highs, lower move lows. And we had that consistently going on into this week. However, the close on Friday has us wondering what's going to happen here. So we will see how the market reacts on Sunday into Monday. And if we get a significant show of strength, not that it has to really rally up to this $1.29 area, but if we could have another positive day on Monday, it might mean that we're starting to find another area to consolidate for the US dollar Canada. I have to say that I don't see any real big fundamental reason for this market to have a big rally that would be going on for months on end. Most likely what we're going to have is a short-term correction, something like what we had back in September, for a month, kind of grind higher and then have like a spike into an area and then fall back off of it. I think that's most likely what we're going to see with the US dollar Canada. We have to wait until the next week or so. Remember, we're heading into holiday markets as well. So that being said, with the holiday markets, we really kind of have to wait for a signal. You don't want to jump in front of a trade. But if you want a low risk buy right now, I would say that you can, let's get this to where I can get this in here. There we go. So we used the low from Thursday here at, what is it? It's $1.2707. Yeah, so right there at $1.2707. If you are a short-term aggressive bull, this might be a nice little area to start pecking off, but I would not risk much below here. Any failure trading below $1.2707, this market's just pounding new lows. So it's a low-risk buy. We don't have a buy signal. Let's see what the hourly looks like. On the hourly for the Canada, well, here's what you got. You had made the lower move low, lower move high, higher move low, higher move high. So I would key off of probably this $1.2752 area on the hourly chart, and definitely a failure from $1.2720 would have us in a very big bearish way. So yeah, depending on where the market opens in, you could risk somewhere between this $1.2719 and $1.2707 area, or $1.27 even as your risk. Anything below there, you're looking to just, you're trying to catch a falling knife. But if we are going to get a short-term turn on the hourly, it looks like we're getting kind of a little signal here for the US dollar Canada. We will see how this all manifests as Sunday comes before we know it, and Monday morning will too. So we've looked at these currencies around the globe. US dollar TRY, we're going to give one quick look at real quick. Still going sideways. Yeah, I think the dollar index, excuse me, once again is starting to find a basing pattern. So we'll see. We don't have any real signals there yet. But remember, we have the euro US dollar. We do have this short-term sell signal. It's still in place. And with the negative close on Friday, if we get follow through and take out this $1.2058 area on the daily, that confirms lower move lows and definitely a short-term turn in the dollar index. So we'll see how that manifests. And just want to remind you to always check out forex-trading-unlocked.com for your Forex trading needs. And when you want to pull up the charts, you just go along, go to the Market Analysis Education tab, hit the Workstation tab there, and then it'll pull up the charts with the numbers, and then you can do your own analysis, and you don't have to log in or anything, and you have access to all kinds of things. Not to mention, also remember to subscribe to our YouTube channel if you have not done so, Forex Trading Unlocked. And then also, if you want to learn how to trade these high probable Japanese candlestick patterns, read the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. I want to thank you for your time here today, and good luck in the trading week ahead for December 13th through the 18th. And we'll see you soon. And we're going to do a couple individual videos for the euro, the Canada, the pound, and a bunch of after we turn this one off. So if you're viewing this one and you want to hang out